A big moment for investors. NSE has officially filed its DRHP. As India's largest stock exchange moves closer to a public listing, let's look at some of the most important takeaways from the filing. The DRHP was filed on 17th June 26. While the IPO dates, price band, and final offer size are yet to be announced, the filing itself marks a major milestone. A key highlight is that this IPO is a 100% offer sale. NSE won't raise any fresh capital. Instead, existing shareholders will sell up to 14.89 crore shares. Another interesting point. NSE is proposed to be listed on BSE. Since regulations don't permit self-listing, India's largest stock exchange will debut on another exchange. DRHP highlights NSE has no identifiable promoter. It operates as a professionally managed market infrastructure institution, a rarity among large listed Indian companies. Let's talk about the numbers. NSE reported an FY26 EPS of 41.62 rupees and a return on net worth of 33.21%. These are exceptionally strong metrics for a business of this scale. Profitability remains its biggest strengths. The company reported a PAT margin of over 55% and a return on average equity of nearly 33%. Only few businesses globally operate with this level of profitability and capital efficiency. The scale of NSE is truly remarkable. Over 129 million unique registered investors and approximately 411 trillion in listed market capitalization. These numbers reflect the central role NSE plays in India's financial ecosystem. In the DRHP, BSE has been used as the listed industry peer. The peer PE multiple disclosed is 66.67 times earnings, which naturally raises the question, what valuation could NSE command when it comes to the market? Based on FY26 EPS of 41.62, here's what different valuation multiples imply. At 35 times earnings, the implied value is approximately 1457 per share. At 40 times earnings, around 1665 rupees. At 50 times earnings, around 2081 rupees. And at 60 times earnings, close to 2500 rupees per share. If NSE is valued similar to BSE's historical IPO multiple, the valuation could be in the 1350 to 1500 range. If investors assign a reasonable premium of 40 to 50 times earnings, the valuation could move towards 1650 to 2100 rupees. And if NSE is valued as a premium market infrastructure asset, the range could be closer to 2300 to 2500. At BSE's current peer multiple of 66.67 times earnings, implied valuation comes to around 2775 per share. At 70 times earnings, the value approaches 2900 per share. Such valuations would reflect strong confidence in NSE's long-term growth and market leadership. Overall, the filing of NSE's DRHP marks a significant milestone for India's capital markets. A business that sits at the heart of the country's financial ecosystem is now one step closer to becoming publicly listed. It will be interesting to see the final price band and how the market values one of India's most important financial institutions.